Hello and assalamu alaikum. This is Ishan Hassan, a tutor of Advanced Audit Assurance, and in this video of the class, we will discuss the question number one, part A, business risk related requirement, right? And how to plan the overall question number one, right? So let us start with it. Now, suppose I'm there instead of you. What I would do, instead of reading the scenario straight away, I will jump to the requirements first, right? And see, here are the requirements using the information below. I require you to prepare briefing notes for my use in which you evaluate the business risks faced by the group. It will provide us 10 marks. And remember, each business risk will give us 2 marks, right? So then second requirement, evaluate and prioritize the risk of material misstatement to be considered in planning the audit of the group. So we have to prioritize the audit risk according uh, the risk which is more significant, either in terms of quality, either in terms of quantity, the size, or the amount, or the impact, whatever standard effects, you have to prioritize it. Most riskier, one, less risky, two, then less risky, three, four, five, like that you have to do. Remember that. So, third requirement with blue color, that is audit procedures to be performed in respect of the expenditure relating to the store enhancement program. And the last requirement with yellow color, ethical issues arising and recommend any actions which need to be taken, right? 7 marks. So, and in the end, uh, 10 marks, sorry, 7, 7, 14, 16, and 10, 26, 26, and 33, and 7, 40, right? 10 marks was a professional marks, which you will get for the evaluation, commercial acumen, professional judgment, right? So now, see, it is 1st July. And remember, in this class, we are doing only business risk. So it is 1st July, and obviously highlighting the other risk as well. So it is 1st July 2005. Your manager in the audit of Department of Stanley Company. Okay. Stanley Company Chartered Certified Accountants is responsible for the audit of the Hammer Group, the year ending 30th September X5. So it is 1st July, and year ending is on 30th September. There's a 3 months period in which you have to plan your audit completely, which is not a listed company, operates a number of hardware stores which supply trade customers and the public. Your firm audits all components of the group, including foreign subsidiary acquired during the year. The following exhibits available on the left hand side. So here are the partners email, group structure and activities, financial information, business developments, and additional services. See, now I met with the group finance director yesterday along with the representative from the group audit committee. We discussed the group activities during the year and its plans to expand into further international market next year. They also provided me with some extracts from the projected consolidated financial statement and selection of key performance indicator, right? They are expanding. That's our business risk. Remember, okay. Provide with some background information about the blah blah blah. Based on the analysis which I've done on this sub industry, it is appropriate for materiality to be based on revenue. Okay, when we will be doing the second requirement, the B1, the evaluation of risk of material misstatement, then we will consider discuss about it in detail. Okay, so don't worry. uh, you will need to determine the plan appropriate materiality threshold in your briefing notes. Evaluate business risk by the group, 10 marks. Now moving down. See, the group operates a number of large hardware stores with the domestic market. Okay, the stores supply building materials and equipment to the public and to the builders. The Hammer brand, which is internally generated and not recognized in the consolidated statement of financial position, is key to the group's success. It is one of the those brand which is key to the group's success, and one of the group subsidiaries which company is a financial services company specializing in providing savings accounts and loans to individuals. Mallat Company is a wholly owned subsidiary and operates the Hammer stores. It generates the majority of the group income. Mallat Company owns 50% retail stores across the country. Mallat Company has been involved in a price war with another national where store to during the year, offering significant discounts and heavily marketing Hammer brand in an attempt to increase market share. So see, we found out two uh, business risks so far. Number one is here, that is too much reliance on for the success on the Hammer brand. Number two, the competitive environment. Okay, here it is. Ladder companies and overseas subsidiaries situated in the file in the group obtain a 65% shareholding of 82 million. The share purchase was financed partly using a 32 million blank loan, was taken out to export, blah, blah, blah. Again, that is, audit risk. Now, the purpose of the acquisition was to expand the group operations into the new geographical market. So, expansion is the third one. This is the first overseas investment made by the Hammer Group. Later company in Farland, 35% NCI, non-controlling interest in Eder company owned by the government of Farland due to a regulatory requirement that at least that proportion of the company share capital is government owned. The currency in the Farland is the same as the group base. The firm was appropriate appointed as the audit of a ladder in the several members of the audit team have traveled to Farland to become the familiar with the company, its key management, personal, regulatory environment, etc. Farland does not mandate the IAS. That's our audit risk. Okay. Ranch Company is the financial service company of the group operating the Hammer Bank. Its customers are mostly trade customers who've been credit loans. Well, that's related to the audit risk. So in the last year, the financial services regulator has been in. That's our you know what can be said. Uh, Business risk. Okay. This one actually, which is now is with the pink color, the financial service regulator has been investigating in relation to loans, meaning that customers can claim back excessive fees they have charged. Ranch company has received legal claims from more than 25 customers. Well, that's related to audit risk. Okay. So then after that, moving downstairs, we have some extracts from the consolidated statements. Revenue, operating profit, etc. From where we can extract the financial information so far. Okay. So then we have various notes. Exceptional items are those determine the management non-recurring in Act 5. Uh, uh, Exceptional items related solely to the store enhancement cause more detail in provided in Exhibit 4. The exceptional items in the prior year were audited in each earn an annual bonus, which is based on annual increase in or profit before exceptional items. The investments include materials such as painting and decorating materials, timber and doors, as well as tools and equipment used by the professional builders, customers planning to improve their home. To do it, the I guess to the group operates stock take once only, right? Then there is a key performance indicators that is gearing, which is increasing, current ratio, which is deteriorating, interest cover, which is deteriorating. Uh, it's calculated by the engagement partner, so you cannot challenge it. Remember, right? Then in February X5 group shared a program of extending and renovating. That's our another business risk. All right, hardware stores which will become destination stores, etc. The program is expected to cost 5.75 million each at any one time. Five stores are closed while the renovation necessary construction work take place, and on average store will close for 2 months. Okay, the costs relating to the store enhancement, including in the statement of profit or loss, which are 65 million. Again, it's a audit risk. Then again, it's completely audit risk, which we will discuss the next time. Okay, in the next requirement. So far, so good. Let's move on and just write related to the our first requirement, w- which is related to the evaluation of, yes, business risk. Okay, so what we'll say, the group success is based on Hammer brand, and any damage to the brand could have implications for the group maintaining its competitive advantage. Right. So, group success based on Hammer brand. Okay. Any damage can impact reputation or can have implications for the reputation and maintaining its competitive advantage. Obviously, investigation into fee matter. A fee matter, investigation into the fee matter charged by the ML group could affect the reputation of the brand as a whole, resulting in customers going to alternative stores and for therefore damaging market share. In addition, it is likely that the group spends a lot on advertising to support the brand name, which will be a drain on cash flows. Then we have another. We found out another one, that is competitive environment. So for the competitive environment, what you will say that the hardware industry or hardware store industry is highly competitive, right? And it is illustrated by the price war between competitor and mallet company, as indicated by the sales promotions offered by the group. There is a risk of losing customers. There is a risk of losing customers there. How? Uh, it is a risk of losing customers to competitors if these strategies are not successful. Further, aggressive strategies will put pressure on net profit margins, okay, and cash flows. The current ratios has fallen from 1.4 to 1.1, right, which may be due to a lower cash balance. Okay, then we have another risk in it, that is extension and renovation program. This is a large investment for the group, approximately. Okay, it's a large investment for the group. 144 million spent on 25 stores, which will cost you 5.75 million each, right? There is a risk that there is not an adequate return on investment if the destination stores strategy is not successful. Risk that there is not an adequate return on it. There is uh, not adequate return on investment if the destination store strategy is not successful. Okay. Also, five stores closed at one time. It will be loss of revenue, and it is a loss of revenue and cash inflow for the company or the group. Okay. Also, there may be danger that customer will use alternative stores, right? So the customer will use alternative stores while the hammer stores are shut. Come to like one of their competitors and do not return once the renovated stores are reopened. In additionally, there is a risk that refurbishment cost will overrun overrun, and that additional financing will be required. This would cause further deterioration in gearing and interest cover, both of which show a negative trend this year and with implications for existing loan covenants. Okay, so far so good. We are done till here. Again, now the next one, acquisition of ladder company. Acquisition of ladder company, the foreign subsidiary represents significant investment by the group. Okay, so it's a significant investment by the group, and there is a risk that business failing and the group losing some or all of its in financial investment. There may be operational problems in terms of the group exercising its control. Okay, so there is risk that they may lose financial investment as discussed. There may be operational problems in terms of the group exercising its control. The government of Ireland owns 35 of the company share capital, as we read in the scenario. And it may be that the government attempts to use its shareholding and significant influence to interfere with the group plans for the company. Any such political interference could affect the return on investment and the group's strategy of international expansions. So, the government own 35% of shares, right? And it can interrupt company objectives like as at by using the significant influence to interfere with the group plans for the company. Any such interference could affect a return on investment, group strategy on international expansion, and this would be made worse if there is political instability or economic problems in Farland. So it could be worse due to political instability or economic problems in far land. Okay. As this is first overseas investment, management at the group may lack the necessary knowledge and expertise to operate foreign subsidiary in with local regulations. So lack of expertise and knowledge. So far, so good. See, 1, 2, 3, 4, and the last one that after the acquisition, we need to do one more. So next one, the fifth one, business risk is ranch company legal claims. Okay. On a general note, the financial industry is highly regulated and represents diversification from the group retail activities. Okay. So number 1 point, it is highly regulated industry and represents diversification from the group retail activities, meaning management will be less experienced because uh, they have not vast experience retailing to the financial institution or this type of industries, right? Uh, they are actually diversification. It's just a diversification from retail activities to the financial institutions. And so they are less experienced with this part of the group activities, and therefore, poor decision making can be done. The claims themselves will put pressure on the cash flow, and the cost of the claim will determine or affect the profit. There may be many potential claims which have not yet been lodged against the group, so the eventual cash and profit impacts may be much more than the amount of the provision which is currently recognized. The financial service regulator could you know the financial services regulator could take further action, for example, imposing a fine, right? So far, so good. 2 marks, and for per business risk, I give you the five. So we got just do not write like this in points, but use these points to make your small paragraphs. Just write these things in small paragraphs, change the heading, use small paragraphs, about 2 or 3 paragraphs, and that's it. Boom, you'll get the maximum marks. I hope the first uh, requirement and how to construct your answer is clear to you. The concepts are clear to you. If you have or any questions, you can ask me uh, either on the WhatsApp or in the comments. That's it for now.